You're tuned into the It's Real podcast with your hosts, Kayla, Kallander, and Andrew Yaggie. Each week, we'll talk about what happens behind the scenes working full-time in real estate and share with you real-life stories, our successes and failures as we work to help consumers and industry professionals reach their real estate and real-life goals. Here we go.
Welcome to episode 51 of the It's Real podcast. I'm Kayla Kallander and I'm a mortgage lender.
And I'm Andrew Yaggie and I'm a real estate agent.
Hello, Andy. How are you today?
I'm really good, Kayla. How are you?
Pretty darn good. It stopped raining, which is lovely because we've gotten enough of it. So sun is shining. It's a beautiful day and the holiday is amongst us soon here. So
holiday is coming quickly. Do you have big plans over the 4th?
Lakes. I'm not sure what it's going to look like for weather and who's going to be out there, but we're heading out, taking the dogs, and going to make the best of it, rain or shine. How about you guys?
Yeah, same for us. Head out probably not till Thursday morning. We won't get there quite as early. Have a few other things going on, but yeah, it should be. Oh, I think the weekend will be what you choose to make it, regardless of weather.
Amen. I like that. Do you guys have any Independence Day, 4th of July traditions that you guys do as a family?
We have a very special tradition on the 4th, Kayla, and that's to just simply celebrate me all day.
I was going to say, was it just celebrating your birthday? Happy early birthday, Andy.
Thank you.
I love it.
We generally have gotten together if we're around the Otter Tail Lake area with my dad's side of the family. That's kind of been, I wouldn't call it a formal family reunion, but, kind of him and his siblings and all of the cousins and everything. I don't know that there's anything formal this year, just, people, 10 families are growing, expanding, people moving away, and that's just kind of how life goes. But no, just pretty laid back. And now, different season of life with us and our kids and my siblings and their kids, and everyone just play together. So it's at a stage right now where, you really have to watch the kids and
a little bit. Yeah.
But it's fun.
Mm-hmm. Well, it'll be a great weekend ahead. The kids will love it. And it's what you make it, right?
Absolutely. So speaking of the holiday week, obviously this is a shorter work week for a lot of people. I'd be curious to know how many are actually going to work on Friday, or how many are taking vacation, or, just pretending to work, but actually taking vacation, the holiday weeks. For some, I think maybe for you or for me, I know I've had a pretty productive week. But I know for others, it's like, well, it's kind of a holiday week. So I'm going to
a lot of
the bare minimum
time off. I know I talked to a few different title companies and they're like, we're only doing closings if people require it. I think a lot of people take this time with these short summers that we get. People take this week, and July is notorious for being a PTO month. So I think a lot of people will get out and enjoy it and just kind of, hopefully, they can take some time off and just, spend time with family and friends. So
for sure. I've got a lake property closing by Detroit Lakes tomorrow, a family that I've known for quite some time who came to me. They're buying their first lake property. And so it's really kind of exciting, as I just think back to when my parents maybe bought their first, and, we were able to, just as a family enjoy it. So kind of a lot of fun helping them get in right ahead of the 4th. They had actually a great lender, someone they've had a relationship with for decades, who got things done in about 20 days. So it was
nice.
Awesome to see that all come together.
That's awesome. I think there's something special about owning lake property when people do take that leap. It's first home, and then it's, upgrade. Every purchase is exciting. But I think there's this level of, is this really happening? Like whenever I finance a lake home for somebody, it's this almost whimsical feeling. They're just so excited and they are so pumped to be able to, I think there's this layer of, we get a place to relax and recharge. And I think that it's extra special when you do a lake home, for sure.
I think you're right. Speaking of lake home and holiday and everything, what are you seeing for activity this week, Kayla?
It's been rather quiet in terms of applications. Our team has seen a lot of people closing in the last week, even into, we had a closing yesterday, a closing today. We had 7 last week, or 8, something like that. So a lot of activity of closings. But usually this time of year, we're seeing it slow down a little bit, especially over the 4th, and then it'll pick up the week after. So quiet on applications. We had a couple trickle in today, but they're not in a rush. They're just kind of getting ahead of it. I think people want to focus on the holiday and they want to enjoy it and not talk financials. So it's a little slower on my end. How about you?
Yeah, I'd say it's slower too, and I think the market has slowed some. And I even look in again my immediate marketplace, and we see a trickle of lake properties coming on the market. Not a lot in the residential single family market, a little bit here and there. So certainly have some people who are ready to buy, but just not quite the right property. I've got quite a number of sellers that are gearing up, not quite ready, but I think after the fourth we're going to see a flurry of activity. Things pick up. So I just kind of have the mindset like, hey, we're going to rest up a little bit and kind of enjoy our time, and we'll be
Mm-hmm.
ready when you're ready for us after the fourth.
Yep, and it'll pick up and it'll get busy again, and then school will hit and it'll get quiet, and then it'll pick up, and then we'll see that traditional slowdown. But I think it kind of depends what happens with interest rates. I'm not saying that that's impacting people for sure. I think a lot of people are used to it, like we've talked about. But with it being an election year, with rates, chatter of rates, could rates drop? I don't know. If they do, will that impact applications, and will that impact people looking to get rid of that 3-4% rate they're sitting at on their current home and finally be willing to give it up to take hopefully a lower rate than what we've seen? So I think that will trigger applications if we see rates drop for sure.
Well, I'm glad you brought that up. I saw an article the other day from Inman Real Estate News with the headline, "A Trump in the Road." Get it? Talking about the fact that, well, and maybe before we get to that, did you watch the debate, Kayla?
Of course I did. I had my halo top. I was very engaged.
That's where I saw you having ice cream. I don't think I read the caption, but I think I did see that online.
Yeah, I get into that. I mean, it was sad to watch,
Yeah.
but did you end up watching it,
I,
Andy?
I didn't. We were traveling, and I didn't get
That's
a
right.
chance to catch it, but I did watch like 180-second, kind of
Mm,
headline, and that was more than enough. It was, kind of a sad state of affairs for our country overall. And regardless of which candidate you like, one over the other. But the thing that I found interesting, in jumping back to that headline of a Trump in the road, or bump in the road, so to speak, this particular article from Inman talked about mortgage rates surging as Trump's odds improve after the debate. And so this just kind of talked about investors who fund most mortgage loans weighed the impact of higher tariffs, tighter restrictions on immigration, and an extension of the 2017 tax cuts under a second Trump administration. And as a result, that sent the 10-year Treasury yield up basically, call it 1/4%, from Tuesday, to the end of the week. What do you make of that?
I don't know, Andy. I don't know what to feel about that, because I don't know if it's related to Trump. I don't know if it's just a quick-witted article. So it's honestly hard for me to weigh in on that, because when we look at what Trump did and where rates were at and where inflation was at, I mean, you can't lie when you see that to say we were in a better state financially. So I don't know. I'll keep my opinion at bay on that. But what do you make of that?
Yeah, I don't know either. I don't know. I think it's maybe some sensationalism as well. But,
A little bit.
again, yeah, there probably are some investors that are looking and thinking, oh, maybe this isn't good because, the status quo is being challenged a little bit.
Mhm.
I don't know. We'll see. I try not to get tied up in the day-to-day
Mhm.
politics. And what about actual mortgage rates, Kayla? What have we seen this week?
As of Friday, I saw them peak up a bit on Friday, come down a little bit on Monday. But as you can see in general, down 0.01 on a 30-year fix. So again, it's pretty flat. I mean, I think that, we talked about this last time. There hasn't been a ton of movement in terms of your conventional, your FHA, your secondary market loans. Now, where we have seen some change a little bit is with our North Dakota housing. So for our North Dakota listeners, we've seen an uptick in rates for our bond programs. So whether you're getting assistance or not, if North Dakota Housing is your servicer and is taking over that loan, you'll see rates between 6.25 and 8.65. And I
Mhm.
know that 6.25 was in the fives. I even locked someone in at around 4 and some change in April on one of their lower income options. So that has come up a bit. But in general, rates have been flat on that 30-year fixed. So,
Sure.
I
So
mean,
most people, and even clients you're talking about, not getting worked up about anything. They're either buying or they're not, or
that's just it. I'll have clients that are like, what are rates doing today? And they're not in contract. Or they'll get into contract and they're like, well, should we lock? Should we not lock? It's a great question. At the end of the day, we can try to forecast and watch rates and keep an eye and our pulse on the jobs report and the CPI report and all these things, and as lenders we get um, a lot of information that we can try to share. It doesn't mean that it's going to completely follow what that forecast is. And we've got the MBA forecast. I don't know if you want to share that, but people say, what are rates going to do and what's going to happen? Well, it's tough to tell, but I can tell you that the MBA forecast for June of 24 is a lot higher than it was in June of 23. So in the middle of the page, you can see in 24 where we're at and to 25 where they're projected. So although we do get these, it's not always spot on.
yeah, and that was really interesting, Kayla, just as we've been kind of reviewing these. And so kind of looking at and maybe even just the aggregate over to the right. Oops. Hit the wrong button there, but looking at kind of the aggregate rate over here. So for 23, an average of 7.3%, 6.6 on average. For 2024, 6058 by 2026. And so compare it. So I mean, I actually look at 2024 right now. We're through quarter two, so right around that 7 mark, and then looking at last year, kind of what was predicted. 5.4. So they're a little bit off. Things have not been moving quite as quickly as everybody would have predicted.
Well, and whenever I talk to clients, it's not often that I have someone say that they regret purchasing a home with where rates are at. Any person that has closed on their home, any family that's closed, has done so, and they've never come back and said, "Oh man, I've got buyer's remorse or regret," because they see the value. And time after time again, I notice the clients that I pour into with education and share with them these things and get them excited and empowered, the more they are excited to make that offer and take that leap. And whether it's a necessity or a want, we all buy things in life. And although this is a very large purchase, but we all purchase things in life not just for what they cost. It's like, is it a need or a want? Is that vacation a need or a want? Same with vehicles. But what I'm seeing now more than ever, Andy, is people are afraid of giving up their like 3-4% rate. They're afraid of leaving that. They're like, I love that. I don't want to give that up, but they hate everything about their house or their neighborhood or what have you. And what's really interesting is with those clients, as I've talked about before, they may have installment loans or HELOCs or credit cards with thousands and thousands. I'm talking hundreds of thousands at 24%, at 8%, at 10%. And when you really sit and talk to a lender about what that looks like, if you were to sell your home, yeah, you're going to get rid of that, 3-4% rate, but you're going to get all this equity and you can pay off this larger debt. When you do that, you free up cash flow. And so the reason I tell you all this is that it really comes down to educating the client again and again. I'll say it, but also, what do they want in their life? Do they want to afford a higher payment? You get what you pay for. Do you want that bigger yard, that bigger house? It really comes down to what the consumer wants and what they're comfortable with.
For sure. So when life gives you lemons in the rate department, you should make lemonade and set up a lemonade stand and raise some extra money to get into the house of your dreams. I think that's
there you go. Exactly. I'll work on that lemonade stand later.
There you go. I want to see a reel or something that surrounds that mindset.
I just put one up today. Where you at, Andy? Come on.
I'll have to take a look.
Well, the mindset of getting rid of your lower rate anyway.
Gotcha. Well, Kayla, a lot of good information. Obviously, we are where we are with rates, but I came across something interesting that I passed along to you. And so, we try to obviously share a lot of great information out there, but Harvard just came out with a report. And this individual report is the state of the nation's housing for 2024. And this is put out by the Joint Center for Housing Studies of Harvard University. And this is actually really quite a very long report. We obviously don't have the time, to go through the entire thing. For those that are looking, you can obviously look it up online. But Kayla, I did want to talk about some of the highlights of this because I think that this was a really, really interesting article.
How long was that article? That was pretty lengthy, wasn't it?
Oh, what was it? It was, I don't know. I mean, it was about 50 pages long. I mean, it was a fair amount of reading, but maybe we'll just, kind of cover the top 5, takeaways from the article, Kayla. So without further ado, the first takeaway was that there are record cost burdens. So the report, Kayla, highlights so there are 22.4 million renter households. 22.4 million renter households, or half of all renters in the nation, are cost burdened, spending over 30% of their income on housing. So this is the highest recorded level, with significant disparities among racial groups and income levels. So that's kind of a hard-hitting piece that, and just thinking, and I think of rent, even in my more immediate area, you're talking to people in the Fargo-Moorhead area and beyond, like rents have gotten pretty high, haven't they?
They haven't, and I'm hearing from clients constantly how much it's going up and changing, and how before you would be able to get, underground parking included, or water or sewer, all these things, garbage included. And now it sounds like they're charging more for them. So as landlords are getting hit with, when we had Danny Miller on that one episode, they might be getting hit with things like insurance costs, and they're passing that along to the renters. So I think there's a lot of reasons that we're seeing it go up, but nonetheless, it's going up, and they're kind of stuck there, especially if they're in a lease, especially if, they are not in a position to get qualified to purchase a home, if they have, negative, terrible credit, if they have any type of judgments, or, they owe any type of debt that, like child support, maybe they can't get a home right now, and they're kind of locked into that. So I think a lot of people are in that position.
Right, for sure. And even in just the conversations I have, even just being out in Las Vegas for a few days, talking to, some of the cab drivers or, wait staff out there, and just hearing their stories about rent and how much it's gone up. So it is a huge thing, which obviously, plays a role and figures into the state of the nation's housing.
Yeah, it really does.
Kayla, topic number 2, housing shortage overall. So the nation faces a significant shortage of over 1 million housing units, and that's driven by high costs for labor, materials, and land, as well as restrictive zoning regulations. This shortage affects both rental and home ownership markets, making it particularly challenging for moderate income households to afford homes. Talk about that a little bit in your takeaway.
I think about the clients that I have that are shopping for homes. Let's just say twin homes. Twin homes are more affordable. Let's say in Fargo, they run at like 225 to 260, let's just say. When those properties come out for people and they want to afford that home because it fits their budget, it's really a rat race. I'll even have like multiple clients of my own making offers. So I think that for people wanting to buy with rates higher than they used to be, there is still a little bit of sticker shock, and people are shopping at the top of their budgets. So they might be at 250 is your max. They're looking at 249.9. And so they get there and there's not a lot of wiggle room to go over. And so I think that the shortage of inventory, especially for people that are really kind of stuck in that zone, that area, it's a big deal. And so you might have, hundreds of people looking at the same home. And then you have these properties that maybe there's an HOA, or maybe you have to go over asking. I really do think that for the people in those ranges, it's a big deal, because the inventory isn't coming. In Fargo, there's not a lot of inventory for some of those. That's kind of my thoughts on it when I think about my current clients. Is there's not a lot to fit their needs, and they're at the top of their budget.
Right. And I see the same exact thing in my market, except I've got, I think of some of the different buyers that I'm working with, and some, especially some younger families maybe, that, hey, we need something a little bit more affordable, but hey, we've got a larger family already. We need like 4 bedrooms, 2 bathrooms. I can't find that. I can't find something that is in a great price point and something that's in good condition. And Kayla, even we look and we've talked frequently about the challenges in our more immediate marketplace, or my more immediate marketplace, where, Fargo, you've got endless numbers of builders that are building all over the place. In Fergus Falls, I end up having, no builders that are building anything outside of, 2 sets of builders that are building spec homes, or twin homes. I've got, a couple builders that will build a random spec home. And we're actually really looking at how can we play a role in solving the housing shortage and getting into some development and really working towards a single spec home, just to kind of test out the market, test out the consumers' preferences. Contractors, I've had a number of contractors that have turned me down just because the trades there just aren't enough tradesmen and women. And so when I look at all of that, I think that at this point about the housing shortage, just talking about high costs for, labor, materials, and then of course, government intervention making things more difficult via regulation and zoning. It's absolutely spot on, and isn't an easy fix, but something that is just good to be aware of.
I agree. And it's one of those things where just having your pulse on it, just understanding and knowing that this is just potentially a season. It's not forever, but I think too, it's totally different in your area than mine. And I can't imagine what it's like for people shopping in Fergus, where it's there's not maybe as many options to build, where Fargo, there's tons of options, but in Fargo, you got those special assessments. So you add those on. So it's kind of like a give and take.
Well, and I think the problem here is, so, right now, I mean, so you talk about it maybe just being for a season, but I think this is a lot greater of an issue nationwide, especially in some of these communities that don't have the Fargo Moorhead options, because how do we dig out of this shortfall? How do we grow as a community? Well, without housing, it's really hard to do. So.
Well, and also people are still holding on to their houses because they don't want to give up that rate. So I think there was an article, I think you and I talked about it, how there's, the boomers don't want to even give up their houses.
Right.
And for them to do so, they would basically be taking a smaller home at a much more expensive cost. So why give it up? So we're seeing that a lot too.
Right. Kayla, point number 3 talks about the federal rental assistance gap. And so this talks about the fact that there's a substantial gap between the demand for and supply of federal housing assistance. So only 25% of eligible households receive aid, leaving millions without support and contributing to high levels of homelessness observed in recent years. And this one really hits home for me, Kayla, kind of as a landlord and someone who has a number of rental properties in the area. We have some great resources here locally in both the local city of Fergus Falls HRA and county level HRA, not to mention a number of other organizations that can provide some housing assistance, but it still isn't enough. I mean, I have some other tenants, or some tenants, that work through these programs and are really well taken care of. In fact, I just got an email from one of them, wondering, hey, do you have any units open? Just because, again, there's such a shortage out there, and they need, safe, affordable places, to house individuals in our community. But then I also have individuals that I work with that they can't get funds. They either maybe don't qualify for some reason, or these programs are stretched so thin that the resources have run out before these individuals can get help. So it's honestly, Kayla, that is a huge thing.
It's concerning. And some of the programs, they're going to be income based. When I think about like North Dakota Housing Finance Agency, for example, so you may be in a position where you want to get assistance, but you have to fall within certain income levels to get the rate, the lower rate and the assistance. So there's a lot of layers to, down payment assistance programs too, in addition. And if you're a first time home buyer and you make over a certain amount, your rate is higher, you can still get the assistance. So something to keep in mind is there's a lot of layers, but there are a lot of hoops to jump through when you do get assistance from bond programs.
Yep, absolutely, Kayla. Kayla, item number 4, climate vulnerabilities. So this report from Harvard talked as well and underscored the vulnerability of the nation's housing stock to climate-related disasters. So an estimated 60.5 million units are at moderate or higher risk of damage, necessitating urgent investment in climate resiliency and retrofitting efforts to mitigate future risks. I feel like does that hit close to home a little bit, when we think in terms of flooding and investment in things like the diversion?
Well, yeah, exactly. And I think too, it's like, when I think of the diversion, the cost to do that. And, Fargo flooded, what was it, '09? We were in college, Andy. Yeah, it was '09.
Yeah, we
We had
were.
that big flood. And I mean, the amount of effort and energy and people and money that went into that, when you think about, I think of like, this is just what I naturally think about. Like, I think of down south, like all these storms in Florida and flooding and hurricanes. And you can't help but wonder with all of these climate changes and things impacting, essentially where you live in your house and are a risk. Obviously, we're going to see higher insurance costs as well. And so, I mean, I think that I never thought that climate would be an issue for affordability. But when we see an estimated 60.5 million units are at moderate or high risk, I would be curious what that was 5 years ago. But it's concerning, and I really don't know how you mitigate that. I think that that's now just kind of part of your cost to expect. It says here that they're looking at efforts to mitigate future risks. Any thoughts of what they could do to mitigate? I mean, like you said, like the diversion, that's a great way, but I'm wondering, like, any thoughts on what they could do?
I think they're probably looking, higher level and looking, hey, nationwide, everything from energy policy to, emissions. I think of like even up in Fargo, you've got weather modification incorporated at Fargo Jet Center, which not a lot of people know about, but they basically take specially outfitted aircraft and they seed the clouds with chemicals or charges that help influence weather patterns to maybe help reduce severe weather. So that's really something kind of interesting.
What?
I can't speak eloquently on it, so I'm not going to talk any more about that, but we can
So
talk.
we aren't getting severe weather because of these planes.
Yeah, hypothetically, that's what they do. They'll go seed the clouds, and I think an effort to change weather patterns. And I've heard some say that there's maybe been some negative effects, which I guess that's probably the likelihood every time you try to mess with Mother Nature. But I just think you look across the country, and obviously the globe is heating up. We have weird weather patterns. How we go from almost a drought last year to the water just won't stop. And you look at all of the extreme, like the hurricane down in the Caribbean right now. Yeah. So just a lot of challenges related to climate.
We'll
And
talk about that later. Because whenever I see the radar come across Fargo, it dissipates and it makes me angry. And I text my sister Bethany, like, why don't we get storms here? Maybe that's why, Andy.
Maybe because of weather mod. Yeah. All right, Kayla, our fifth point that we'll touch on in this housing report is rising home prices and rent. So between 2020 and 2024, rents for professionally managed apartments increased by 26%, while for sale home prices surged by 47%. Despite a recent slowdown in rent growth, the overall high costs continue to pose significant challenges for households.
I really don't know what to think about that, aside from the fact that everything's been going up. Look at the cost of your groceries. When $300 would fill up your trunk of groceries, and now it's the front seat. So I can't help but think in general, the cost of everything has just gone up. And I think, again, when we look back at landlords and the costs that they have, if they can pass that along to renters and they still need to cash flow, they're likely going to start charging more. And that's where we always, speak so highly about why when you do own a home, yes, you've got your taxes and your insurance on your own, but you are really in control of your principal interest if it's a fixed 30-year. So, I take that as everything's increasing, but I mean, I think rents in general are going to continue to go up. I mean, especially if we continue to see landlords, having their own costs that they need to pass along.
Yeah.
What do you think about that?
I think, Kayla, I just look at everything that's going on in the economy, and I look at reports like this, and just, I talk to people in the banking industry who say, boy, credit card debt's at all-time highs. People are utilizing their HELOCs, at unprecedented rates and everything else, and really just to survive. I think something's got to give. I think, some sort of correction or something is coming. I don't know how it can't. I don't know that it's going to be some giant reset, at least in markets like mine where there's such low inventory. That's the really, really tough part. But we're starting to see and talk to some appraisers, some other agents and lenders, even starting to see some appraisals or some homes that aren't appraising for what people are offering for them. And I don't know, I just think at a certain point we're on just such an unsustainable path.
I agree.
And there's just so much intervention that's needed, as pointed out in this lovely report.
Thank you for finding this. I love that. I mean, it's chock full of information, and it's really for us to take and regurgitate and articulate exactly what we're seeing. What's cool is we can see these articles, we can, break it down for people, but then we can share exactly what we're seeing, being, boots on the ground in the industry. So thanks for sharing that.
Yeah, absolutely. Well, Kayla, I think that wraps up episode 51. We've kind of covered a lot of information today. So to everyone out there, I hope you guys have a great holiday weekend. Stay safe. And Kayla, enjoy the time with your family and your pups as well.
I will if you will. We'll see you soon. Happy birthday.
Thanks. Yeah.